On the heels of large physical gold buying in China this Q1 2024, it was reported today by Metals Focus that last month, February 2024, India made its largest monthly import of physical silver on record. Before we get into speculation about who and why for such big buying seemingly out of nowhere in India, let's put last month's 2,200 metric tons of silver imports into India in size context. That's just over 70.7 million troy ounces of silver going to one country in just 1 month. That's equivalent to more than 70,700 of these industrial-sized 1,000-ounce bars. India last month alone imported more than the US Mint produced in 1-ounce American Silver Eagle coins in 2021, 2022, and 2023 combined. In terms of monthly silver import data, when this 21st century chart gets updated, the orange bar will blow up and off the chart. I know, we're probably all wondering it. What in God's green earth is India up to buying so much physical silver? Well, it looks like one of the world's largest lithium-ion battery gigafactories is beginning operations this quarter, Q1 2024. And some of the largest players in the physical global gold and silver markets are associated. Now, I'm not suggesting all this record-size import flow from last month is alone to build batteries, or solar panels, what have you. But it most certainly could be half, given this Q1 2024 factory's kickoff. A few further items to break down from today's reported data. Almost half, or about 1,000 metric tons of this record size imported into India last month, was in silver grain, or tiny silver bead form. That was provided by the quote value add that the UAE provides Indian importers of silver. You see, Indian importers importing silver from the UAE also enjoy a new trade agreement between the two countries, and they only pay a plus 8% duty or tax on their silver imports, compared to the current plus 15% duty or tax on silver imports from elsewhere. How much do you want to bet that the powerful Indian government-connected businessmen behind these coming battery and solar factories are the ones getting the subsidized reduced tax silver grain imports from the UAE? Now, moving to other places for which mass silver bullion exported to India last month, it warms my heart to see the City of London coughing up over 600 more metric tons from its diminishing, mostly unsecured silver vaults. The local premium dip on the bottom left chart does suggest that Indian jewelry manufacturers and local silver dealers also took large imports of silver locally, hence the collapsing local premium of silver in India of late. Now, for an emerging market like India, on the cusp of massive growth this decade and in the coming decades, this is merely history rhyming. If we look back at our very own post-World War II U.S. empire, the blue bars here represent gigantic amounts of silver we net imported decade after decade, because our domestic silver production couldn't come close to generating what we required to become a, quote, developed economy. A similar phenomenon is now happening, but in a larger, faster fashion in 21st century India. What, you don't mine enough silver? Well, you're going to have to buy and import enough then. Better get busy, because China is also paying through the eye to locally acquire physical silver at the same time. And this yearly Indian silver price chart is threatening to break out soon. After this brief message, we're going to see another real-time forewarning of a burgeoning commodity supercycle, and how this record price explosion in chocolate beans historically front-runs major moves for silver bullion markets that follow. Stick around.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates.
Subscribe to our official YouTube channel here for weekly bullion market updates. And don't forget to sign up below for your chance to win 500 Tree of Life silver bullion coins.
Want to win 500 Silver Tree of Life coins from SD Bullion? Enter and you could be the next lucky receiver of a phone call like this.
Hello. Hi, Stuart. This is Dr. Tyler Wall, President and founder of SD Bullion. And I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of 2023 Silver Eagles.
Oh my God. You got to tell my wife this, because she's not going to believe it. Honey, Okay, doctor, let her know.
Yeah, this is Dr. Tyler Wall. I just let you know that you guys won the Monster Box of 2023 Silver Eagles giveaway from SD Bullion.
No way.
Yeah.
She would never believe me if I told her that. I'm online all day long with your website looking for deals.
Wow, that's awesome.
Yeah, your site's fabulous and your company's fabulous.
Well, I appreciate that feedback. And we'll be following up with you shortly on getting your Monster Box shipped to you. Congratulations again.
Thank you, doctor.
So click the link below because the next big winner could be you.
Gold finished this week slightly down from its record nominal price run last Friday. The spot gold price closed over 2,150 fiat US dollars per ounce and has now completed 17 weeks in a row above the building 2,000 ounce price support level. It wasn't too long ago that price level was resistance. The spot silver price popped a bit this week, closing above the 25 an ounce threshold. It's going to be interesting to see when we next make a run at 26 an ounce. Possibly that's next week. As a result of silver's relative strength this week, the spot gold-silver ratio fell to a still historically high level of 85. With Bitcoin also recently near its all-time price high, it's not surprising to have seen appreciation and increasing momentum capital inflows into the recently launched unsecured ETFs. As Western unsecured precious metal ETFs have been net selling over the last few years, underlying physical bullion bars have flowed east. Meanwhile, unsecured ETFs in Bitcoin have now ballooned to a third of the notional value of all precious metal ETFs. 67 billion in BTC ETFs versus 198 billion in unsecured precious metal ETFs, as reported by Bloomberg on this chart here. But governments and their central banks have not been buying unsecured ETFs in either Bitcoin nor GLD or IIU. They've been buying gold bullion in record size instead, typically taking direct delivery within their respective physical jurisdictions. Sure, since Bitcoin's start in 2008, it has grown massively. As we all know, Bitcoin's current market cap now stands at 1.35 trillion fiat US dollars, and meanwhile gold over the world since the end of 2008 has gained close to 10 trillion in net market cap. In the end, all of finance rests on a bedrock of growing gold value, and like human nature, that's unlikely to change in our lifetimes. Turning to the collapsing commercial real estate market and reported bank holdings in percentage terms around the world, it's not surprising that recently privately bailed out New York Community Bank is concentratedly stuffed to the gills with bad commercial real estate loans. But large U.S. commercial banks also have large admitted exposures. And take this with a grain of salt because accounting rules increasingly have been tossed to the side and postponed since the 2008 global financial crisis. Only omniscience really knows all that's under their books properly marked to market at the mega banks. The FDIC has recently shown us the largest spike to levels not seen since late 2008, early 2009 in non-performing commercial real estate loans, currently held with the mega commercial bank class, not the smaller regional banks. CNBS was bad this week, same author as last week's gold propaganda. This week, she managed to insinuate that anyone buying gold or silver bullion is an end-of-the-world kook, even as governments around the world are buying gold bullion in record volumes. They even had nerve enough to again put in print the ridiculous claim that gold has risen about 1% a year on average over the last 100 years. Again, stop treating your readers like idiots and propagandizing your left-leaning audience to not get prudent bullion positions now while they're relatively cheap. I tweeted directly to the author to rescind her last 2 weeks' article errors after finding the likely source of their reporting. It turns out William Bernstein wrote this in 1996 when gold was around 380 an ounce. That was the 16th year of a brutally long secular bear market at the time, and even then gold had returned 4.2% per year, as he pretended to know what price inflation had been over the last 70 years of time. So that's US-based CNBC gold propaganda. Let's now quickly turn to CNBC International for a professional adult speaking on behalf of where gold is at the moment.
I think it's surprised us in terms of intensity so far this year. I think the trifecta of the Fed cuts, central bank sharp support, particularly from emerging Asia, the likes of China, the likes of India. What's really interesting about the gold story this year is that it's not just the financial play in terms of the Fed cuts, but also in terms of the physical. And in terms of the central bank support, it's just been significant. When you look at the flows coming into China, when it's coming into India, that physical demand is just significant. And I think in terms of that diversification play from a lot of the central banks continues to play out. In a deglobalized world, or increasingly so in terms of the breakage of supply chains and the economic autarky that we see consistently, you want to be diversified. And I think physical hard assets like gold, like bullion, have consistently been a very strong play when it comes to emerging.
Lots of loud calls trying to humiliate and stir further Russian hate this week out of the European Union. Their finger pointing went all the way back to World War I, when Romania sent 91.5 metric tons of gold to Russia for safekeeping during World War I. It was never returned. Of course, this is all happening while the US and many in the EU are considering jacking $300 billion in Russian US bond savings and handing it all over to Ukraine and the World Economic Forum dreamers, who will likely siphon much of the proceeds supposedly to rebuild the war-torn nation. 91.5 metric tons of stolen World War I Romanian gold is valued at the moment just under, say, $7 billion in current value. Now, would Romania get back theirs if the US and EU stole Russia's $300 billion? Not a chance. After all, if we're going to go down that road, there's a lot of South American countries to reimburse for mines looted to help world trade begin in the 1700s. Let's get more reparations from Nazi Germany while we're at it, for all the gold they stole throughout Europe during World War II. Japan owes China about 6,600 metric tons after looting the former capital of Nanjing in 1937. Are we going to go after that too? Instead, this kind of nationalistic button pushing is how wars get fomented. Knock it off, Europe. You collectively lead the world with over 11,000 metric tons of gold reserves claimed at the moment. Pipe down before emerging markets and once colonized African nations start demanding their gold back from you. And to finish this week with some sweet cocoa to silver bull market charts. Cocoa futures on the COMEX blew through 8,000 today, going exponential. Earlier this week, I took a side-by-side image of its full fiat currency era chart on the left here, cocoa versus fiat US dollar silver chart on the right. Again, since 1970, they both span. While these markets, fundamentally speaking, have nearly nothing in common, their respective long-term charts, when juxtaposed over one another, paint an interesting front-running picture. Basically, they both boom during commodity supercycles. Cacao typically runs first, here in black with yellow price boom highlights. Silver later booms in pink on this chart when it makes major bull market moves higher after the fact. This third silver bull market following this latest cocoa moon move higher should prove to be the sweetest of all time. That's going to be all for our weekly SD Bullion Market update. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.